Now for a shareholder's perspective on AT&T. His firm held almost 144,000 shares of the stock as of Friday. Jeff Davis is the Chief Investment Officer at Lee Munder Capital. He's with us this morning from Newton, Massachusetts. So, Jeff, the question many people are asking right now is, why own AT&T? You've got at least three options, right? If you want wireless and a wireless investment, you got AT&T, Verizon, and Sprint. What's the perspective? What do you think?
Well, the core business for AT&T is actually still pretty good, and a high dividend payout is not bad either for a market that seems to be moving sideways and can't get out of its own way. So there's a lot of appeal to AT&T in spite of this unfortunate turn of events. So there's a lot of reason to hold it, but I think things would have looked better for AT&T had the deal gone through. But Jeff,
if you compare AT&T and Verizon, the dividend yield isn't that much different. Verizon's getting about 5.2%, AT&T delivering a 6.1% yield. But the story for Verizon seems to be so much better. They struck a deal on wireless spectrum with the cable industry just about 2.5 weeks ago. Analysts called it a strategic masterstroke. AT&T clearly had big ideas about merging with T-Mobile, but now that the regulators have thrown it aside, what options does the CEO, Randy Stevenson, have left to compete with what Verizon is putting on the table?
Well, he's going to have to be very creative here, and and it's very tough for Deutsche Telekom as well. I think foreign investor in the United States and really is going to have a hard time finding an exit strategy for T-Mobile. So T-Mobile is going to be scrambling for other deals, and AT&T is going to have to try to reposition itself in different areas. But this would have been good for AT&T. I'm not sure about the issue about the consumers. Longer term, I think it's going to hurt AT&T's growth. So I think it's going to be challenging for AT&T to grow in the future and to compete against Verizon.
Jeff, do you think that the concerns and the disappointment are fully priced into AT&T's stock at $28.74?
Yeah, I think so, and I think this news is not a big surprise to the market. It's disappointing in many ways. I'm not an anti-regulation hound the way some are, and this is obviously going to become a political football now. But this was a close call for the regulators. I think it could have gone either way. We were kind of hoping it would go the way of approving the deal, but it's unfortunate now. So. I think it'll put a little bit of a cap on the price appreciation near term. I think the dividend's fine. The earnings are fairly safe and consistent. Stock's not bad. It's not a sell, really. But it's disappointing that I think it could have been an interesting playing field going forward.
Jeff, what about the potential chilling factor that this rejection by the regulators may have on M&A in the rest of corporate America, something that our own Hans Nichols brought up just moments ago?
I think it's a good point, and for whatever side of the political fence you're on, you don't want to cool. Well, first of all, you don't want to frighten away foreign investors in the United States who think they'll come in and they won't be able to get out, and that seems to be the situation for Deutsche Telekom, which is, I think, really unfortunate. And so it's not a good time for this. On the other hand, it's good regulation will help industries. This one it's a close call. I think it went the wrong way, so we'll just see what AT&T can pull out, what kind of rabbit AT&T can pull out of its hat next year.
Sounds like you're disappointed, Jeff. I wish you the best. Jeff
Davis,
Chief Investment Officer, Lee Munder Capital. Jeff, happy holidays.